Greetings everyone, Joseph James here from SchoolOfTrade.com with your nightly newsletter. Today was December 4th, 2009. Before we talk about the trades we took today, I want to remind you guys, what did we see this morning? Well, if you guys head to our newsletter page, that is SchoolOfTrade.com/news, on Thursday evening we post our newsletter. Of course, those videos are on our YouTube page and they're here on the SchoolOfTrade.com/news page. And we knew that 8:30 this morning we had our non-farm payrolls. Now, guys, there's a list of news events that you want to have marked down. Things like jobless claims, new home sales, crude oil inventories, non-farm payrolls, right? Third quarter GDP came out not too long ago. These are all news events, guys, that are going to be catalysts for a lot of volume that will be entering the market. So when we saw 8:30 non-farm payrolls on Thursday night, we knew we had to be here for 8:30, 8:35 Eastern time on Friday morning because non-farm payrolls, 104 ticks, $1,040, and if you can see, you had the best week of 2009. But as you guys can see, 65 ticks Tuesday, 70 ticks on Wednesday, 96 ticks on Thursday, and 104 ticks here on gold, crude, the Russell. We got one more week before we go on vacation, guys. We'll keep you guys posted. First trade of the day, though, here on the gold. Again, the GC contract just before our 9:15 alarm went off, and of course, at this point in the day, we'd already seen the non-farm payrolls come out, guys, so we had already started seeing things more volatile, more volume. First trade here, guys, on the gold, a breaker long pattern. Now, as you guys know, with a breaker long pattern, a breaker pattern, it's a trending continuation pattern. Short-term trend at this point was up. Now, as you guys can see here, we have one of these distinctive horizontal red lines. Now, remember, guys, we build our entire foundation of our trading on top of these, what we call high-profile levels of support and resistance. Now, our indicator package locates all this stuff for us automatically, so all we have to do is show up and look for the levels. So we show up, of course, we break above that red line here. 91.2 was the swing high, and as you guys know, a breaker pattern is then going to break through that swing high, and of course we took that at 92.4. Get your first target of 4 ticks. We get a second target here at 5 ticks. Now, kind of an interesting situation here. What happened was the market was actually moving at a kind of a illiquid point here and jumped over our second target, and we had to kind of finesse our way out of the trade here. But nonetheless, +4, +5, and of course 2 off at the first target, 2 off at the final target here. Totals 18 ticks there for $180 on our first trade. As you guys can see, we were just getting started here today, though. Next trade here, though, again on the gold, was about 20 minutes later, 27 minutes past the hour. Now, this was called higher risk in the room. As you guys know, we have an alarm clock that goes off at 9:15, and everything from 9:15 to 9:35 is going to be higher risk, just because of the impulse situations that happen before the U.S. Open. On a day like this morning, with a news event like this, we had a lot of volume, and it's really hard to, of course, deny these patterns setting up. We've got green paste of a tape, lots of big buyers and sellers coming in, so it really made it difficult to sit on the sidelines. But I just want to make sure you guys are aware, though, after 9:15, we are sitting on our hands until 9:35 to let that whole thing kind of work its way out. Now, here at 9:27, like I said, high risk, short-term trend here was up. Now, again, how do I know when my short-term trend is up? I look at my trigger line, right, this yellow line here. Nice and steep slope to it. Trending up, short-term trend, of course. It's my fast time frame. We have a swing high. Again, this is located for me automatically. My indicators do all the heavy lifting for me. 96.7 was a swing high. As you guys know, we're then going to look for a couple ticks above that swing high. We call that follow-through. Okay, we're not going to jump in just 1, 2 ticks in. We're going to wait a couple ticks, see those buyers jump in, momentum curl back to the upside. Got in at 97 long. We took our +4 and our +1. Now remember, guys, in markets like we're seeing right now, choppy, sideways environments like we're having right now, we're going to manage our trades a little bit more what I call being aggressive with your defense. And that means tightening up that stop a little bit tighter, which means that entry point +1 tick. Now, in a more trending environment, we're going to leave that stop at just our entry point. So at your first target, you'll move your stop up to your point of entry in a more trending environment. In a more sideways environment, because we're going to be seeing a lot of these +4 scratches, right, just getting our first target filled, when we hit our first target, move our stop up to entry +1. That way we can make sure we account for a little bit of the choppy sideways issues we're having here towards the end of the year. Just be aware of that. So we break above 96.7. We got our +4 ticks. Move your stop to entry, +1, and then, of course, it came down and took us out at our point of entry +1. Total up for 10 ticks there, guys, on our second trade here on the gold. Let's keep moving. Now, here was our only trade of the morning on crude, 9:39. Now, remember, guys, our alarm goes off at 9:35. And what are we always doing at 9:30? At 9:30, we're getting mentally prepared for the day ahead, but what else are we doing? We're making sure all of our trend lines are drawn properly, all of our indicators are all updated. Everything is perfect because at 9:35, guess what? I want to be ready for that trade when it shows up. They tend to show up a couple minutes after that alarm goes off, so be ready for it. One of the only two-step patterns we took today, a counter trend trade. Now, what is a two-step pattern? A two-step pattern is a potential breakout that's failing, right? It's a failed breakout. So it's whenever we're waiting for a breaker pattern, the breaker pattern doesn't set up, we look for the two-step. We look for the two-step pattern playing inside of levels of support and resistance. So you'll see here, guys, on your charts, we've got double tops, right, double bottoms, sideways market. So we're waiting for price to break out above, right? We're waiting for price to break out above this sideways chop. But we're always in a position where we can look for the swing low, breaking course below that swing low. Here at 9:39 on the crude, a two-step pattern, right? Counter trend trade. So how do we know where the trend is? We know where the trend is because we look at the trigger line, right? That trigger line here shows us where the trend is. Trigger line points up, we're looking for a two-step short. Trigger line pointing down, we're looking for a two-step long, right? Counter trend trade. We locked up a +5 here, +1. That's your 12 ticks here, guys. Entry was 63. A little bit more of an advanced position here, guys, because we didn't have much of a trend going on at this time. So you kind of want to wait for a nice trend to develop, then look for the reversal of that trend. So kind of an advanced entry here because we were mostly seeing kind of a sideways market here. But look to your indicators. That trigger line will always define for you where that trend is. Counter trend here, guys. 9:39. We put our 12 ticks in our pocket here on crude. We've got two more trades, guys, both on gold. Now, gold was one of the movers, of course, of the week this week, if you guys are with us all week. We saw, once again here, short-term trend being down. We mark our swing low here, 91.9. We break below the swing low, of course, momentum pointing down, green pace of a tape, large aggressive sellers. Now, this was one of those situations, guys, where we had a little bit of an illiquid environment here, which means we had kind of the benefit of it because our first target didn't get filled until +8. Interesting situation, obviously. Usually when we have low volume, we're going to get the bad fill. This one, we got a good fill on that first target, got a +8, and then trailed our stop at a +6, taking off the rest of it. So in these periods of time where things get very volatile, illiquid, you're going to find yourselves obviously having some, this is a little bit odd, obviously, an 8-tick first target, and then trailing our stop there to lock up 6 more ticks. Bottom line is, guys, it brings in 26 ticks here, or $260 here on the gold for that fourth trade of the day. And we're not done. One more trade we took this morning. Of course, finishing up here, guys, at 10:34. We had to wait about a half an hour. We went into the dead zone after 10:30 this morning. Didn't really see much else after that. Pretty typical for a Friday, though, ending up a little bit earlier than normal. Here again on the gold. Now, 10:34, what had happened at this point, guys, we're starting to see things start to slow down, right? We had Bernanke speaking. We even had Tim Geithner speaking. I think Frishay said a couple things here or there after 10:30. So things really quickly slowed down afterwards, but of course, not before we were able to grab some pretty good profit out of the market again. Here at 10:34, here in the gold, guys, short-term trend is down, and of course, we break below that swing low. I want to say about 87.6, 87.7 here, just below the 1188 even. And of course, 87.4 was our fill. We took a +4 ticks, 8 ticks second target, and then trailed our stop for 21 ticks. If you guys are with us here this morning in this trade, guys, for 37 ticks total, that's $370. And all you guys need is a $4,000 account to come trade with us every single day here in the live trade room. So a very small account needed, guys. 37 ticks there. Total them all up at the end of the day. Over $1,000 on only 4 contracts. All you need, guys, is a 4-contract account, which means under 4K is all you need to come out and join us and trade with us on Monday morning. Let's prep for tomorrow. Monday morning, guys, December 7th, 8:20 gold, euro, pound opens up. 9 o'clock with the crude opening up. 9:30 we have our U.S. Open. 11 o'clock we'll switch to lunch. But beware, guys, tomorrow, as you can see, nothing really going on except 12 o'clock. We have the Fed Chairman Bernanke speaking, Big Ben speaking at noontime tomorrow, Eastern time. On Monday. So as you can see, this may be a pretty quiet Monday, guys. So if you got a dentist appointment you've been putting off, you may want to go take care of it on Monday morning. Let's recap. Live trade room opens up 7:45 on Monday morning. Come on and join us, guys. If you're watching this video on our YouTube page, right below it in the description, you'll see 2 links. One to subscribe to our newsletter, one to view our 12-month track record, and to register for our free 3-week trial. We'll do free webinars on Tuesdays and Thursdays at 11:30, so make sure you guys come out and join us next Tuesday and Thursday at 11:30 Eastern Time. Remember, the beginner's course shows you guys all the setups and all the entry rules, so pick up a copy of that. Our last day of trading is December 11th, 2009. Hope you guys are having a great holiday season. Hope the video helps. My name is Joseph James. We'll see you guys Monday morning in the trade room. We had the biggest week of the year, guys. What's going to happen next week? You'll have to come out and find out. We'll see you guys on Monday morning. Bye-bye for now.